public companies that use crypto outperform crypto tokens. Why? Because distribution's king.
The problem with these DePIN things, though, is that their tokenomics have been just really bad. And that's like the biggest criticism.
It's not just DePIN projects that have faulty tokenomics. It's most token projects that have faulty tokenomics.
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy a quick word from some of our awesome partners who make this show possible.
Crypto UX? Broken. AI? Can't trust it. Let Magic Newton set you free. It puts your on-chain transactions on autopilot. Does all the work for you 24/7 so you can go do what you want. The vision of Magic Labs. The creators of embedded wallets, used and backed by the best. See for yourself. Simpler crypto UX, verifiable AI agents. Newton.xyz.
Introducing SummerFi, one of DeFi's oldest and most battle-tested platforms. SummerFi automates your exposure to DeFi's highest quality yield so you can sit back and enjoy this summer. Deposit stablecoins at USDC or USDT and let SummerFi route your funds into optimized, low-risk lending strategies. With over 100 million in instant liquidity and support for over 34 protocols across Ethereum, Arbitrum, and more, you always stay in control. Choose from a wide range of curated strategies reviewed by independent risk experts, all in just a few clicks. So why work hard for your yield when you can be lazy? Start earning now at summer.fi, the home of the lazy summer protocol.
We're gonna go to ECC for Can,
Okay. Yeah.
and then from there we'll see how it goes.
I love the nomadic life.
Yeah, man, you've been traveling quite a bit as well.
Not as much as you.
Yeah. How was the Avalanche Summit?
It's very good. You know, I've been to a few Avalanche conferences. I think I went to one of the first ones in Barcelona.
Yeah.
It's just very serious people. You know, like a lot of really good builders, like not fluff at all. The venue was great.
Yeah.
We were the opening. I was the opening speaker, which was caught off guard. I was like, I thought Emin was going to open it.
Yeah.
They're like, no, you're going to pitch Inversion. I'm like, oh, okay. But it was great. I mean, I really, I've been very, very impressed by the caliber of other ecosystems that I perhaps was not paying enough attention to. Of course, I've gone deep into the Avalanche, working with them, tied to the hip, and Virgin will be an Avalanche L1. So yeah, it's just very serious. From I come from traditional finance, private equity, investment banking, Morgan. Like I'm dusting off. It's like I come to these conferences and I spend most of my time not in crypto conferences.
Yeah.
But Avalanche is like the closest thing to like enterprise grade, the quality of the team. Yeah. For us, it matters a lot.
Yeah. So you finished the raise as of recent. I'm not sure if it's been announced.
It has not been announced.
Okay. Well, I'm spilling the tea a bit. Otherwise, it's been a couple months now. Heads down, focus. You guys been hiring, doing a ton. I'm just curious, like, what's been your lifestyle change from before starting Inversion to now, and how have you been adapting to that?
Great question. I mean, it's not that dissimilar from investing. I mean, you are also an investor.
Yeah. Disclosure.
Especially when you're investing in early stage projects, the thing that you need to assess is try to get a gauge of how good is the founder, and is he going to be able to inspire other people to join the team, and if you're a venture capitalist, that's a skill set that you need to refine. You're reading people and you're assessing technical competence and leadership skills. And I think as a builder now, it's like going a step further because you get to do it. And I'm now in a position where I need to convince smarter people to join across many different areas. And it's so rewarding. I'm like addicted to now. I'm like, who else can I go out and sell on this idea and then have them join the team? And honestly, it's been so, hey, what's up, brother? It's so rewarding, because I mean, you're familiar. I mean, I don't need to rehash what we're trying to do at Inversion, but I think I wouldn't have left and put everything on the side to do this if the mission and the outcome could have a a massive impact in crypto.
Yeah.
And I think when the mission is such, I've been very inspired by the people that have reached out, folks that I'm like, this person is very comfortable in their role in crypto, outside of crypto, but the amount of applications that we've gotten, I think like, one of our lead investor has a pretty big recruiting team, and they were like, we've never seen a startup get this amount of inbound from people, not just in crypto, but outside of crypto.
Yeah.
LinkedIn paused one of our posts because we posted that we're hiring 2 private equity associates.
Yeah.
And we got so much inbounds, I think 400 in the first hour.
Yeah.
They're like, they paused it.
You have to be a bot.
It's truly, yeah. So all this to say is, I'm trying to build the most dense human capital organization.
Yeah.
And I'm addicted. I'm having time of my life. Yeah. It's so inspiring. You know what I mean? It's like when I go back to certain moments in my career, it is incredibly empowering when someone that you admire comes to you and says, I believe in you.
Yeah.
And now it's the inverse, which is like people that I really respect, that I know have a high opportunity cost, for coming saying, you know what, I've been crypto curious, but this is the first thing that actually makes a lot of sense. And a lot of it is not just to what we're doing. I think the industry is at a point where it's like actually a very pivotal moment.
Yeah.
Regulations cleared up, the infrastructure's been developed. So I couldn't tell you that I'd be in the same position if I tried to do Inversion 4 years ago.
Yeah.
But timing is sometimes everything.
Yeah. How's the seeking for businesses going?
I'm very
An
active.
investor update here. It's just like a private invest. So what are you doing?
Well, not to leak too much alpha, because we're obviously under NDA with all these businesses.
Yeah.
But
Yeah.
I can tell you that I'm working 100+ hour weeks, and I'm like grinding till 4 in the morning doing models and Excel junkie. It's like going back, deja vu, like as if I were an analyst at JP Morgan, their investment bank.
Yeah.
Doing like leverage buyout models. So
Or how many like companies are you analyzing on a weekly basis, would you say?
we have a very well. The interesting thing is, we know what we want to buy.
Okay.
We don't know exactly the company. We have a list of companies that we like. But we've pressure tested the thesis so much that it allows us to do diligence very quickly in a particular company. Because we'll go in there and be like, we're looking for these very specific things.
Yeah.
And so it's very focused, and that allows us to, we're not a team of 100 people and consultants. But like back in my day, like in private equity, like a large private equity fund has a massive army and consultants and advisors and all that. And look, we'll use them, but we're very focused, and we know what we want to buy. Again, this crypto-enabled business transformation that allows us to very quickly spin up and go and like find the answer.
Yeah.
So we've looked at a number. We're very focused on Latin America, just because, stablecoins are all the rage these days.
Yeah, I was gonna say stablecoins must be enabling a lot of like possibility here.
Exactly. Yeah. And so for us, like we have narrowed down the sector, the region. Now it's a question of negotiating terms, price, specific, like company specific elements, but we're busy.
Yeah. Okay, so a bit more broadly, Santi, how are you seeing the, like, let's just call it the non Bitcoin Ethereum market right now, kind of like the token market? What are you seeing in the market from a investor perspective? From like, I keep kind of memeing around this revenue meta, but it's really just like this like idea of it feels like a lot of these assets are kind of moving towards like show me the money, productive. Like there's just a big shift in the mentality of investors, I think, in this space that has happened as a result of Hyperliquid or as a result of the new administration.
Yeah.
What are you seeing from your investor's lens in the market now? And it's quite a broad question, so feel free to kind of take it wherever.
Yeah, I touched on it a little bit in the roundup that we did live.
Yeah.
There's like you have Circle, and Circle's done a 10x since it IPO'd.
Yeah.
Mind you, this was right before the IPO. People were saying it's not going to go public. The IPO is bought. It's going to get acquired by less than six billion. It's going to get acquired by 3. It's going to trade down. And here we are on the state of the world where Circle is at 300.
Yeah.
It's done a 10x.
Yeah.
And I think that's very indicative of like people outside of crypto traditionally have been wanting to express a long thesis on crypto and then particularly stablecoin adoption. They haven't been able to do that. And a lot of these allocators don't want to touch a token. So when Circle comes along, it's an easy buy for them. It's an easy way to go to their PM or go to their CEO and say, hey, listen, if you're sitting at a hedge fund, you're like, this is the cleanest way to express a view in the public markets. And of course, Coinbase has caught a bid. You now have 10 other probably companies that are private and are going to go public. Chain analysis of the world. Yeah. So it's an interesting game because like it's a liquidity flow. It's like we've been in a position where, to your point, very few assets have really performed. In this cycle, if you weren't allocated to Hyperliquid, Solana, Fartcoin, and some derivatives, like you or in Bitcoin primarily, you would have vastly underperformed. And it all comes down to where the flow is going, right? Hyperliquid, very clear. They've really positioned themselves as capturing like on-chain perps. And they've actually done a phenomenal job. And they have the burn mechanism. Like, people get that very clear. It's an easy, clean story. So the question is, like, where do the next, if 100 billion, 500 billion of flows are going to come into crypto, where is that going to get allocated? I think different than other cycles. Now you have more and more instruments that investors can express along crypto via. You have ETFs,
treasury companies.
you have Bitcoin treasury companies. You have Coinbase, Circle, Robinhood, Nubanks. So does that mean that tokens are not going to catch a bid? I don't know. I mean, I think there's a time and a place for people at some point in the cycle. They express and go farther and farther out on the risk curve. But you guys know this game better than anyone. It's like human psychology at the end of the day does not change. People that miss Bitcoin are going to buy Hyperliquid. People that miss Hyperliquid are going to do something else. People that miss Circle are going to buy something else. And so markets are incredibly psychological environments. And so that dynamic never changes. So I'm not here to tell you that Bitcoin dominance is going to go above 70%. At some point, these things do catch a bid. The thing is the nuance, right? And also, I think, like, if you've been in crypto for more than a couple of years and you're now bearish or thinking that, like, tokens are dead, well, you have, to your point, regulatory environment clearing up. You have the ability to now, like, truly call perhaps these tokens as they are. You have the token transparency thing, which I think is going to be important. And so this gap that you've had of, like, governance tokens dancing around securities laws, I think that largely goes away. And, like, again, draw a comparison. Circle, Maker, Coinbase, Uniswap, Hyperliquid, Binance, and all the other exchanges. At some point, the market wakes up and says, oh, wait a minute, there's this thing called Circle, and then there's a thing called Maker that is pound for pound a better business model. Has 1/100th of the employees. Like, you know how many engineers Hyperliquid has?
I think they have less than 20.
Like 10 or 12. Wild.
It's
Like,
And to that same point, Tether is now the most efficient bank in the world.
Correct.
They, have a number of employees. It's much less because they don't have to adhere to some regulation that requires them to hire 300,000 employees like JP Morgan. And yet, by deposits and reserves, all reserves, right? But the 8th or 9th largest bank in the world.
It's wild. Crypto-enabled businesses. You're going to hear more of that.
And just thinking about it as businesses, actually, right? And less so about just kind of like token creation companies or something like that.
I mean, people are still caught up in the meta of, like, Bitcoin and wrapping their head around what this is. Robinhood has caught a very interesting bid. Vlad, the CEO, keeps talking about, like, how his business is structurally more efficient on the crypto side than the traditional brokerage side. I think the market now is increasingly understanding that crypto is, Bitcoin is interesting social experiment, but this space offers so much more that I'll go as far as saying that more value will be created by companies that come into crypto because they see an opportunity to leverage this technology to cut some costs in their P&L. If you're a Google or if you're a company that is paying some service provider, Web2 company for data, and you can say, oh, I can use HiveMapper for location data, or GeoNet, or I can use Helium as a network to buy Spectrum POS.
The problem with these DePIN things, though, is that their tokenomics have been just really bad. And that's, like, the biggest criticism.
Correct. I don't disagree with you that. But again, it all comes down to, if a network catches a lot of demand, you
can then turn something around, right?
Look at something like Helium, right?
And they have 1 million daily active users.
Yeah,
exactly.
So that token model clearly works. I think it's not just DePIN projects that have faulty tokenomics. It's most token projects that have faulty tokenomics.
I'd be curious to get your guys' perspective, but, like, there are a lot of tokenomics that were codified in a world where there was a very different regulatory environment, and so it warrants like, if it's a good product, then you could probably restructure the tokenomic,
Right.
to some degree. But again, it all is, do you believe that this project actually is real demand? And I think some of these projects are actually getting real demand from real companies that are saying, hey, listen, this is a good network. It produces data that is reliable and it's a fraction of the cost.
Yeah.
Tell me why, reasonably speaking, you wouldn't adopt it. And Hive Mapper
Yeah.
has mapped a third of the world roads. The data is reliable, is up to date. It's community-owned network. It is landing Fortune 500, Fortune 50 companies every other week.
Yeah.
Introducing Asset Runes, the future of decentralized finance. Stablecoins natively on Bitcoin. Hedge against volatility. Diversify your portfolio. All directly from your Bitcoin wallet. Secured by ZK technology. This is Asset Runes. Available now, exclusively on Starknet.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yields on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via FBitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
One kind of more investing question here, and then we'll let you go in a sec, is that we've focused a ton on like angel and kind of like private stuff for the last like 2-ish years, allocated a lot through our fund. Now we've been really just kind of like really picky on the private side and like very focused on maximizing the liquid side, as we feel that we're like beyond mid-cycle per se, whether you agree we're in a cycle for multiple years or not. I'm curious, like through your investing journey through different cycles, how you've like managed the thought process of allocating between like liquid markets and private markets. I'm like, if there's like a model that you've had to like slow down or ramp up, or if it's really just like project and founder based. Just kind of like maybe help us understand a bit how you think about those two parts of your portfolio and like kind of how the timing of basically where we are in different speculative periods affects how you allocate.
I don't change my investing framework based on market conditions. I do. Some of it is informed, but like if I see public like liquid stuff be totally neglected, then I think the risk trade-off at some point, you're like, oh well, I like this project. Why wouldn't I like allocate it to it? I mean, at the end of the day, all of these are early stage projects. So I just come at it from that standpoint. Some have marginally more liquidity than others, which again, I invert and say, okay, as an investor, where I've made the most amount of mistakes is where I've over allocated or don't have cash flow or don't have the opportunity to invest. And so when you go too far in the spectrum of investing only in privates, and if you invest the $100 that you have into privates, you should be prepared to like hold that position for the next 10 years as is traditional venture. Now, crypto is one of those liquid venture asset classes where you can have a token and whatnot. But I think going into an investment, if you're going to do privates, it's like probably isn't 100%. For me, it's always been a disproportionately high percentage of my portfolio because I feel that's where I have an edge. I've cultivated a relationship with founders. I like to be one of the first investors in projects, and I go in there saying probabilistically it will likely not work out, but if it works out, it has sort of power law distribution. But managing cash flow is super important. Why? Because the worst mistakes I've done are when I feel the crunch.
Yeah.
Everything goes down, and look, no one has ever complained that they've had excess liquidity to deploy when everyone is scared.
Yeah.
And I think the best investors, like categorically throughout the history of finance, have been ones where have been incredibly patient and have waited for the market to come to them. The problem is like everyone has anxiety holding cash. You want to deploy it.
Unproductive, right?
But now that's been the biggest upgrade that I've done, which is I still very much love meeting early founders being one of the first believers. It's just, I like it.
Yeah.
It's inspiring. If I can be a part of the journey of like believing them early on, all the better. But I guess I've been in a position where I've now optimized for like having a very good set of my portfolio totally uncorrelated. And so most people always think about, is the thesis correct? Less so, is this the right structure? Is this the right liquidity? Is this the composition of the overall portfolio? And so I think like that's where I spend more and more time around like, I want to always have uncorrelated assets because that then allows me to be really way more aggressive in stepping in. And because look, in the next 5-6 years, are we going to see Bitcoin less than 100,000?
I don't think so.
You don't think so?
I think it's possible to get it under, yes, but like I think it's more likely it goes higher.
Yeah, I don't disagree with you. I do think that we will see it definitely sub 100,000.
Yeah.
And you want to be there with cash when everyone else.
I thought you meant like in 5 years.
Yeah,
is
not in a binary moment, but I'm saying
in the period.
there are very discrete moments. Look, I think like a lot of things don't change. Like human psychology doesn't change. What does change is the velocity of markets and the movement of money is like there's just an accelerating pace. Like most investors don't hold on. Like in 1980, 1990, most investors were holding on to stocks for multiple year periods because most of that relationship was brokers, and your investment advisor would like call you every 6 months and say, hey, by the way, here's how you doing. Like, yeah. Now you have Robinhood where people can express views on the daily, real time. And so the velocity, the market is just mimetically trading these things, not just in crypto. But I do think like if you can allow yourself to break away from that for a minute and say, this is what I believe in, I'm going to focus on these particular areas, and I have this thesis, I think it serves you well to like, as much as you are bullish on a particular opportunity, to have uncorrelated assets where you can draw from in moments where the rest of the market is saying, God, like go study Howard Marks. He is the person that I draw a lot of inspiration from, because investing is a very psychological sport. And he says one thing that has always stuck with me, which is the market pendulum swings from extreme euphoria to despair, and fundamentals never deviate from like a tighter middle range. And so if you have a good understanding and appreciation for what this technology offers, the real fundamentals, like from your position, you get to talk to a lot of founders, you get to understand where the puck is going probably better than others.
Yeah.
Then you have a pretty good, like that's your edge, right?
Yeah.
Do you want to be like levered long 10x and be liquidated? Absolutely not.
That's not the point.
But when you see the market, like if you're in this conference and everyone's like bearish project X, Celestia or whatever.
Yeah.
But you know the team, you've been paying attention. You're like, okay, well, clearly the market is not being efficient.
Right.
And I'm willing to hold this bag for the next 5 years. Yeah, you step up with big conviction. And the other thing is like there's a lot of insight that you can gather by on-chain activity.
Right.
You know, the vesting schedules, you know who's selling. And so that is just an added piece of information where you always want to appreciate the dynamics of, because I'm always like second guessing. It's like when I come across something really good, I'm like, surely I'm not the first person to look at this. What am I missing?
How do you manage your own psychology amongst the general market psychology, where the general market psychology may be wrong and you may have a contradicting opinion? How do you reconcile the two?
It's like that meme of like the guy staring at it's like the market's wrong.
Yeah.
How do I reconcile it? It's given me again, I think when I was in the pod, insulate your lifestyle to a point where you can absorb all the irrationality.
Yeah.
And if you hold the position, it's like, listen, I'm always willing to change my mind and quickly. But I never want to be forced into doing anything.
Yeah.
Because that sucks. Everyone's been in a position where imagine that you're bullish in the space and you get forced to sell because you have obligations, you have to pay your bills, you have to.
Yeah.
And so if you can insulate that, it gives you mental clarity to say, I'm going to dedicate as much of my time to continuously absorb information on this particular thesis that I have, which is the modular thesis is correct. Yeah. And you're constantly like paying attention to everything that's going on in other ecosystems, and you keep like processing information, but you never want to be forced into doing anything.
Right.
Because that sucks, man. That you can have the thesis right, but if you don't express it correctly, none of it matters at the end of the day.
It also supports your point about patience. And insulating your mindset and your lifestyle will help prevent decisions out of necessity.
Correct. Yeah.
And therefore maintain patience.
Yeah. Like the ideal state is you don't have to think about anything other than doing research, doing the roll-up, bringing on smart people that you're going to absorb as much information from. And then you package all that and you express a view.
Yeah.
Why would you ever put yourself in a position where you have to think about, am I getting liquidated? Do I have enough money to pay bills for the next couple of months? Like, you want to be almost like, I guess the way to do it is inverting and saying, in an extreme scenario where this asset were to fall 90%,
Yes.
I'd be extremely excited to step in. I need to have the capital to do it.
How often do you think about inversion from a philosophical view? Is it part of your belief system to sort of look at the thing at its face value and then take one step deeper and invert from a different perspective?
Yeah, I mean, always invert.
Yeah.
And I'll summarize it in,
be on this.
I mean, it's a Charlie Munger brought it from German philosopher, and the process of inverting is like, I would summarize it as, if you focus on the downside, the upside takes care of itself. So like, clearly you guys are here and are dedicating your career because time is the most valuable commodity. Now, you've decided that crypto is one of those generational categories, industries that has captured the zeitgeist and is going to transform every industry. You either believe it or you don't. And I think you see most people come to that conclusion because discovering crypto, I almost wish that I go back in the first days that I did it, because it's like you open a door in the future and you see ways of doing things that can transform the fabric of society and businesses writ large. But then being patient enough to saying this might take actually 10 years or and so what you want to do is be in a position where you can be very patient. I don't think it takes another 12 years for companies to start using this technology. I think it actually will accelerate because crypto sits on top of the internet and you have distribution and, the world discovers these things faster. But again, if you focus on the downside, and what is the worst thing that can go wrong? Well, the space can go down, regulation can change.
Yeah.
It doesn't mean like back in 2012 when I first discovered this thing, there was a very material risk that the industry would go to zero.
Yeah.
There's only Bitcoin.
Yeah.
Now,
It's not the case.
I think that existential risk has gone away. So now you're in a really interesting position where it's like, okay, this is in the next 20 years, crypto will go from what is still a very drop in the bucket of an asset class that is still discounted. You walk around, you outside this venue, you just appreciate that no one is actually using crypto in the way that it will be used.
Yeah. Yeah.
Like this technology is not relatable to anyone other than, oh, this is another way to express risk and maybe like make a 100x bagger, like it's a casino.
Yeah.
That is going to change faster than most people think. But I also, a part of my brain just always goes to, am I willing to wait? And if this were to take 12 years, will I be here? And will I continue to express this view and maybe increase my allocation to it? And so I get comfort around that. Maybe it's a coping mechanism, but I think like we're at I've said it time and time again, I do believe it. Like there's something just so powerful of the arc of this industry where you see it fitting into so many different industries and and exponentiating what AI can do from a data verification, immutability, model training, inference, whatever you want to do or call it. But like crypto sits at the core of a lot of our like super generational transformations. Like you best believe this asset class is going to grow at least an order of magnitude.
Yeah.
Don't do dumb shit. Survive.
Yeah.
Stick around.
It's the name of the game.
Like you can't even be lucky if you're dead.
Right. No.
Don't die. Quite literally, don't die.
Yeah.
Do you have any esoteric or out of the box thoughts around AI?
It's AI.
Yeah, or about like this, like the way that the space is, transforming and just growing. Like, do you have any?
Yeah.
Any kind of like?
I'm not an AI expert. I do use it now. So two insights. One, I've felt less of a need to hire for analysts, for instance, because what I can do with Perplexity or Deep or ChatGPT, even mock-up designs. I'm not an engineer, but I've been able to mock up some designs for how I want to build and transform the company. So like, I've like what would have taken me a team of 10 people and like an order of magnitude in cost. Now we're a lean and mean team, but we use a lot of AI in our workflow.
Yeah.
So it's allowed me to do things that I would have required to have a team of 3 analysts and taken a month to produce a mock-up or an MVP. Now I can do it quite literally in less than a day. Anything that is repeatable, we're cutting out of the equation. So like we can be vastly more efficient as a startup that we are because we just raised a round. We can leverage these tools for a fraction of the cost, and they're super powerful. So that's like insight number one. I think it's I just have observed it firsthand building Inversion. The other one, perhaps more controversial, is that I think the impact that crypto will have on the making companies more efficient. You know, when people talk about AI, is like companies are going to be able to use AI and fire like a big part of their workforce, and they're going to be more efficient. Any repeatable process, like AI, will truly make these businesses very, very efficient.
Yeah.
I do believe that. But I think everyone like is focused on that. What I believe that perhaps others don't is that the impact that crypto as a piece of technology is going to have to businesses is going to be more material in the near term and probably medium term than AI. Why? Because AI, like you have these companies investing hundreds and billions of dollars in CapEx and H100s to train data and models and whatnot. And look, it's okay. I think it's overhyped. I think the market, when DeepSeek came out, everyone freaked out because it's like, wait a minute, you have companies that are spending hundreds of, quite literally, massive amounts of capital to pay ChatGPT or whatever. And then DeepSeek says, oh, with 5 million, we're able to build a model that is like pound for pound good. And so I'm cautious of investing in anything AI because I think the pace of innovation there is really chaotic and fast. I think the companies that really reap the benefit of AI are like large companies that have data. So the S&P 500, like go along the S&P 500. I wouldn't invest in an AI startup. But I will say like crypto is a piece of technology, and we're seeing it in Inversion. This quarter, our thesis is, sure, can I buy a company, make it 10% more efficient with AI? Absolutely, and we'll do that. But I can cut costs 60, 70% of the crypto rails. And I think like that's something that like no one in the public markets like appreciates.
Yeah.
I'll tell you who appreciates it, Stripe.
Yeah.
They bought
Privy.
Bridge, they bought Privy.
Yeah.
But if you go talk to the analysts that are covering these companies are talking about AI, with them, hey, what do you think about crypto as a piece of technology that could allow companies to cut costs or go to markets or expand their top line because it can, from a unit economic standpoint, they all of a sudden stablecoins has allowed them to do so and so. Like, oh, what are you talking about?
Yeah.
Like, no, it's not. It's totally not in their in the language of markets of analysts. Like everyone's talking about AI. What I'm so excited about what I'm doing is that I hope that I can deliver that moment for analysts that covers telco at JP Morgan. I buy a company and the entire telco universe has like shitty margins. And I took this company and like double margins. And the analyst is like, oh, you probably did AI to do that. And you're like, to some extent, but it was quite literally using crypto rails. And I think once we do that, I think the focus and how people perceive this industry is vastly different. These conferences are not going to be people with t-shirts. It's going to be people with suits coming in saying, how can we use the modular, thesis, or how can we implement crypto in our workflow? So I guess that would be probably the controversial take.
So are you going to wear suits to the crypto conferences?
I'm dusting off my suits because I'm hiring mostly from people outside of crypto.
Yeah, you are.
Like in finance, and also conversations like you go talk to a management team. I want to buy their business. I can't show up in a t-shirt.
No. Yeah.
Yeah.
I think this has been a great conversation. Just one last thing for you. What are you bullish on, and what are you bearish or cautious about today?
Just in general, crypto, life, anything.
Let's do one for life and one for crypto.
Probably crypto's easiest. What am I bullish on? I'm bullish. As I said, I think this we're at a pivotal moment in crypto. I think I'm earlier now. It fits into so many things, and I think we're truly at an inflection point. And a large part of it is because the regulatory environment has changed. And, I'm excited to see a lot of things that we wish we could have tried as an industry maybe a couple of years ago, but we couldn't because of these constraints. The nice thing about it is so much infra has been built that we're at a really interesting time to execute and deploy in these things. So token design, tokenized stocks on chain, all of that I'm super bullish on. I'm bearish on, what am I bearish on? I guess I'm marginally bearish on how people express the view on crypto because I think that probably changes. Like I think like there's a version of this world where like public companies that use crypto outperform crypto tokens. Why? Because distribution's king. If you don't have distribution, it's tough.
Yeah.
Robinhood,
Yeah.
has distribution.
Yeah.
Maybe a question for you guys: what do you think outperforms, Robinhood or Coinbase, or Robinhood and maybe not Hyperliquid, but
Yeah.
it's just something I think about a lot. And this cycle is different than others.
Yeah. It's been the public equities this cycle though.
Yeah.
At least in the
Yeah.
at least so far.
I guess I'm bearish on public companies, like bootstrapping it, like the token, like the warehousing tokens, like the MicroStrategy.
Yeah.
The 100th MicroStrategy is not going to work. So I'm bearish that. So that would be it for crypto. I don't know if there's anything specific
I'm curious about for life.
for life.
Well, let's
Like what
cautious about.
as we rumble into this world of AI, of brain rot, of social media, of the change in the way that the world works, what is what are some things that you think are going to be prioritized more, or the puck will go to that direction? For example, one thing would be zooming to human interaction experiences, right? Or
You're bullish on patience.
genuine authenticity. But
Virtue.
so what are you bearish on it in that?
I'm very bullish on I think the middle ground kind of disappears. The extremes proliferate. So you remember when the Apple Watch came about, everyone was saying that traditional watches were going to die.
Yeah.
It's been nothing but the opposite. Why? Because in a world where you're totally digital, you crave the other extreme more.
Yes.
The human interaction, the analog. I love collecting watches. To me, there's something so nostalgic and just remarkable about the watchmaking as a craft.
Yeah.
So I'd be very bullish on craft, like something that is the total opposite from, as much as we were talking about technology and we love technology, there's things. Morgan Housel has a great book, which is Always the Same. I think it's Always the Same. It's phenomenal because, yeah, we're at a point of like the pace of innovation is like, there's never been a moment in the history of humanity where we've innovated across multiple dimensions.
Yeah.
And it's compounding. But at the same time, a lot of things don't change. And so I think there are certain pockets like entertainment as a category, or human interactions, or watchmaking as an industry. Like, I think those continue to see rising demand because humans will always crave one thing, which is differentiation and the signaling of things. So like, I think those experiences, like sports, they're all the rage, right? The Lakers just sold for like 10 billion or so. Like, these are things that never change because humans at the end of the day don't change. And so I'd be very bullish on understanding like in which areas, whether it's watchmaking or whether it's sports as franchises, like really like that, I think never goes away. And I think in this world, it's so tempting to say, no, that disappears because we're totally going to be digital. Yeah. But I think, and what I'm bearish on is, I mean, I think when I first discovered crypto and Bitcoin was around, I think like I'm bearish on governments that don't serve their citizens to the best way possible, because I think we're moving more towards a world where when money transcends local barriers and moves easily, it places more, I think there is a power shift more towards society, that if you're in a place where the government doesn't treat you fairly, you can pick up your shit and leave. Meaning you can buy Bitcoin and leave. And you saw this in Venezuela. You saw these in the places. So if I'm a government and you're not holding up the other end of the bargain, which is providing core services, tax a bit. I think this whole construct of nationalism and like governments and like the separation of power, I think you have now this thing called crypto, which truly transfers power more to people.
Yeah.
That's not to say the governments are going to cease to exist. It's not to say it will always be a thing, but I think that it is. I'm bearish on governments that are regimes that don't treat people fairly or don't hold up their other end of the bargain.
Yeah.
And that could be the case of like how easily people move from New York to Miami, but that extends further at a global scale.
Yeah. Well, one of my favorite YouTubers is Nomad Capital. He talks a lot about like living in different places, how to do it, optimizing structures, and his saying is go where they treat you best.
Correct.
And that's like the world that we're headed to, like more and more.
Yeah. Montesquieu talked about 3 separations of power, like legislative, executive, and judicial. Yeah. Now you have a 4th tool, which is this thing called like non-sovereign stores of value and digital rails that transcend local borders.
Yeah.
Now, are you still going to affiliate as an American?
Right.
Like, I'm not American, but I identify with the values of this country, which is extreme innovation.
Yeah.
And people care more about your ideas than your background, old money, new money, all that crap. And I think that's powerful. That is a philosophy, is not so much a country. And I would argue if you're in like someone in San Francisco, like San Francisco is this collection of people that come there because it's a mecca of innovation. But, there's people from all walks of life, all different countries, I think they have more affiliation to their company values than their country, per se. If you're a Googler or like a... So anyways, Balaji talks about the
Network state.
the network state. I really ascribe to that.
Santi, man, appreciate your time.
Yeah.
Thanks for joining us.
Thank
today.
you, guys. I appreciate it. Yeah.
Always appreciate the conversation.
Always a good conversation.
Yeah. Bigger conversation.
If perfect is always better.
That in person's always.
We'll have to do it again if you guys are not bored of me by now. Thanks, guys. Thank you, guys. Take care. Enjoy your week here. Yeah, you too. Yep.